Hello, ladies and gentlemen. It's Modern Financing with Sasha. My name is Sasha Starr. We are going to look into the markets and what to make out of it. And joining me right now, it's Nick Paliveda, the founder of the network. Welcome to the show, Nick.
Hi,
And
Sasha.
former professional from Wall Street, my co-host Peter Bennett. Welcome to the show.
Hey, Sasha. Hey, Nick.
Okay, so what's happened with the market? What, Peter, you noticed lately?
Well, my segment is all the news you need to know. That's what I'm going to call it every week now. So first, a few stories that everybody probably has heard of, either in the general news or the financial news. Elon Musk said he has, quote, a super bad feeling about the economy. Jamie Dimon warned of a looming economic hurricane. He talked about maybe a Sandy or an Andrew. On the other side, interestingly, though, his own economist said he doesn't think we're going to recession. So there's a disagreement at JP Morgan over which way it's going. Personally, I think it's not looking good. Target came out, and the market went up a lot on this news. Again, reverse psychology, but it makes sense because what happened is Target, first of all, twice in the last 3 weeks changed their forecast for their earnings downward. And they have a lot of inventory, and a lot of other companies are reporting a lot of inventory. So the market interpreted this positively because they thought, Target's going to discount their prices, plus it means inventory, there isn't too much inventory, a shortage of inventory, so prices are going down. I disagree, because the causes to me are the ones I've been talking about for over a year now, is energy, rents, which have a 12 to 18 month lag to the price of housing, and labor. And those are not changing. So this is what I would personally expect, is inventories to go up because people are struggling with everything else. This Friday, inflation is going to be reported, the CPI. It was 8.3%. Last month, it's expected to be 8.2%. Not a big change. Natural gas hit a 14-year high, 930 a million BTU. Now, just a year or two ago, I remember when it was $1.50 a million BTU, 250 million BTU. This is a big strain on the consumer. And by the way, this is what I don't think the Fed's going to raise as much as people think, because I think inflation is going to crush the economy anyway, without them doing much else. But I think they're doing the right thing, gradual increases and creating some fear now, but that's the problem. Oil, you ready for this? So oil in Europe now, I read an article about somebody who was taking a vacation in Europe, and he took a 4-day vacation. He or she, I don't remember, but 4-day vacation. They found that gasoline is $11 a gallon in Europe right now, and they had an SUV. So to fill up the SUV, $250. That might crimp the European economy. I mean, and who knows where it's going in the U.S. again? Nobody can say. Goldman Sachs said this week it's going to 140 in the next, I think, 3 weeks. It's at 120 now. But the summer's just getting started, and there's shortages of oil. This is not totally surprising, because the energy companies are putting in 50% less than they need to reinvest to keep up. That's an estimate, but to keep up even the supply where it is now, is probably under investment still. And they're doing it for a lot of reasons. But one is the regulatory environment. 2, it's hard to get supplies and labor. 3, if they have a terminal time when oil won't be bought, why would they keep pumping oil out forever if their business is going under, or a large part of it? And I have an interesting chart I'll show you in the end when we get to the dividend section about how oil, under some scenarios, is going to go down dramatically, the usage by 2050. Fidelity announced that they're going to put crypto, Bitcoin, that is, allow it in 401ks. That the government immediately came out and said this is not a good idea, and I tend to agree with government. Paulson, a hedge fund, had said a long time ago, and this is my favorite quote: Bitcoin's a scarce amount of nothing. So the IRS already now came out with a 1040 tax form that requires people to report their crypto transactions. People are not going to like that. There's no secrecy to it. And also, they're going to have to figure out their taxes, which is very difficult on it, and pay the taxes, or it's tax fraud. So people are not going to like this at all. And this is going to hurt crypto. And in the long run, digital currencies will replace crypto because there's no advantage to the private crypto anymore at all. And as countries roll this out, crypto will probably be like Beanie Babies. Some good news and some bad news, but at least some good news, which is hard to get these days at all. But Medicare actually went and said that
Right.
they're running out of money in 2028 rather than 2026, which is rare because it's usually going the other way. And Social Security runs out of money in 2035 rather than 2034. This is good news, and it was due to a lot of the economic activity during COVID and a quicker recovery, whatever it is. I don't understand exactly. Maybe also inflation worked in their favor. But either way, the bad news is they're still running out of money. And they're going to, in a few, it's not a long time off. And once they run out of money, they're going to have to print money, I imagine. And that's why the Fed's going to have to force rates to zero. That's what I've been predicting all along. And so it's not going to be good for the economy. Will go back down the Fed rates. I'll show you a chart at the end when I get to some charts. Some other news was I reported last week 43% occupancy nationwide for offices. And a study in New York City said 78% of New York uh, companies expect to have shared now time in the office. In other words, hybrid program. So I think there's a looming black swan potentially. I stay away from REITs with offices, even medical REITs and storage REITs, because they're going to have to convert all that space all over the country to something. And it's probably going to, I don't, that could hurt a lot of different industries. And it's a black swan sitting there. I'll just show you a few charts now. Uh, and also LNG. I found out that Europe is now reporting the U.S. LNG, like liquefied natural gas, 74% is now going to Europe alone. Last year was 34% because of the war in Ukraine and their transition. They announced that they want to achieve 90% reduction in oil from Russia. So, but that's again, the cost is already outrageous, and it's going to be very hard to transition to that. But that's what they're trying to go. So I'm going to show you some charts, and then I'll ask some questions too. But this first chart is long-term treasuries, and you could see. And what's interesting is if you look at the end here, right there, this is way off the trend line. So I've been buying 3.5%. I can't promise anything is it good or bad, but I know it's safe. So I've been buying treasuries to 2041, 2043, long-term munis. I now am slightly over 50% because I remember last year, the year before, I couldn't get 1.5% in a muni, and I was selling them. I was like, and I certainly wasn't investing in them if I sold some stock. But now, to me, to lock in 3.5% safe, if the rate goes up, I'll just take some of that interest and I'll just buy higher rates. But my forecast is it's going to go back to this trend line. This is a 20-year trend line. And you could see it's never broken that trend line until now. So it's because of the unusual conditions. Also, this is interesting for gold bugs and for treasuries. So if you look here, gold and treasuries almost all correlated all along in terms of the rates. And now all of a sudden, after since 2015, this is, you can see that there's a sudden break again. These are very unusual conditions. I'm sorry, my finger, I'm not too good at the reversing. But you see, this is gold up here and treasuries down there. So if this, since 2015 trend line continues, either gold is too high or treasuries are too low in terms of the prices. So my guess is treasuries are going to go back up to where gold is and yields are going to go back down. And I don't expect that to be soon because people are so afraid of inflation. But the Fed probably can't control it. Finally, two other charts, very interesting charts to me, I think. So this is the S&P 500 for, sorry, again, since 1982. And again, trend lines. So look, it always followed that trend line since 1982, up, 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 right? But all of a sudden, it's considerably higher, and it only was higher one time back here, but right now it's higher by quite a bit over the trend line for 20 years. So if it returned to just the trend line, it would be about 2,600, maybe, give or take. So that's a big drop from 30, wherever it is today, 4,000, somewhere around there. So there could be a very significant drop if things just return to trend line. And then finally the NASDAQ, which, by the way, these tech stocks make up a good part. I think it's 25% now of the S&P. So here's your NASDAQ chart since November 1st. And I'm not, this is since November 1st, 21. And that speaks for itself. This is not a very positive trend line either. And again, and I will say, I'm not a technical person. I think, Sasha, you use technicals more than I do, but these are not favorable trends, and there's a lot of trends that are showing that are not normal. So what adjusts, what goes forward, I'll put it to the panel.
Okay, wonderful, Nick. And what's your view of what you're trading these days?
I'm glad you asked. First of all, Peter brought up this issue relating to cryptocurrency, and recently it was an article in the Wall Street Journal. Some gentleman invested like nearly 400,000 into a cryptocurrency and pulled out 3,000. Now I don't know what the rate of return on, but it was pretty negative. So he pretty negative. He hired a group of attorneys to sue the crypto manager for basic fraud, which is what we've been discussing all along here on this network, but now you're starting to see lawsuits. Some of me, I don't feel sorry for him because I'm going like, he was a speculator. If he made money, he would say, good for me. If he loses money, he's going to sue the cryptocurrency. I mean, come on. But at the same time, we had our red flags on for months about cryptocurrency. Another red flag we had, of course, is the Tesla Twitter debacle. Now debacle because Elon Musk discovers, which I already know, that a lot of the viewers were robots, not really people watching. And it's something that anybody who's in media doesn't take you long to realize that, hey, are these numbers right? Are they wrong? Are they robots, etc.? So he's looking to pull out of that deal, which I find quite interesting. And then finally, I've got this company which I purchased yesterday, Ford Motor Company. I'm giving them an F,
Really? Wow.
but I bought into them last night, and here's the reason why. First of all, my business partner went and bought the F-150 high. It has good gas mileage for a car for $70,000, and I'm going like, the F-150 goes for 70,000, and I keep checking on the internet. Yes, it does. What happened is Ford came out with their what they call hybrid vehicle, the F-150, back ordered over 200,000. By the way, he's not going to get delivery for another 3 months. They're so far back ordered, it's not funny. They've developed what I call the 737 of the trucking industry, which is the fuel efficient F-150. And here's the other reason I bought into Ford. They're trading near their 52-week low. And my basic philosophy is buy low, sell high. I don't know how important that is. And even though you say the
It's
market's
probably important.
I think it's important. And even though you think the markets are efficient, I think the markets are totally inefficient. If they were efficient, a company value doesn't fall 50% in a matter of a couple of months. So what happens, it's inefficient. We just don't know where the inefficiencies lie. Because I used to do corporate valuations all the time for estate planning. And if you evaluate a company today, it's not like 6 months later it's worth half, unless something drastic happens, which could happen. But unless something really drastic happens, the valuations aren't that far off, which tells me the market is totally inefficient. Otherwise, we'd have steady valuations. and we don't. But anyway, I think Ford is a possibility. So I almost went all in on them, but I'm going like,
What can I just ask
oh,
before you go on? What was the gas mileage on that car? Do you know?
27 for the
27.
truck. Yeah, for the truck. It was a F 150 at 27. You have to realize that a lot of those vehicles are getting 13 to 18 miles per gallon, and during this high, as gas becomes more expensive, there's also data that shows the average person that owns cars right now are holding it 11 years. Okay, so there's a lot of people that want to turn their cars over or their trucks if you're in the United States. We have a love affair with these stupid F-150s. I hate it, but that's me. But Peter, there's a huge portion of the population that loves these trucks, and they're going to have an opportunity to update their trucks, and they're going to go to Ford Motor and they're already backlogged 200,000. So I'm going like, and worst comes to worst, I just follow Sasha's theory. I become a long-term investor, on Ford. Okay, fine, but I'm not sure if it's going to be long-term. They were trading at 25 a share in January. I've been following for a long time, but they dropped now to 13 a share. Come on,
Wow.
So anyway, that's what I'm doing, Sasha. Oh, by the way, I'm holding all my oil stocks. They're doing well. The oil dividend
Excellent.
Oh
stocks.
yeah.
I wish I bought
Speaking
more of
about market efficiency, don't forget that the Ford is a major U.S. manufacturer, and it acts lately like some kind of a Chinese high-tech stock. So, 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 why hell that stock went from 25 to 13? Because the fundamentals haven't changed really. They didn't have any disastrous quarter or anything, and yet it acts absolutely horribly. So, I'm not following that company really to tell you with conviction, one way or another, what's happened to it. But maybe you're right. Maybe it's a buy. Maybe it will go a little bit lower. It
I'll take a
doesn't.
look at it.
I mean,
I take a look at it. And I'll tell you why. Because it seems like the country's bifurcated. You have a lot of people who are going to be struggling, but then if they have a product that's really good for the top third or whatever who
them.
isn't going to be struggling, then they
Yeah.
could buy these big trucks. Maybe. I will say though, I bought a Sequoia, which is a giant truck. I got a used one for 50 grand, which is a fortune. I mean, I never bought a car like that. I turned in my old Highlander for 30 grand because I got a lot for it, because it was used. But I want the safety because in case I'm going to drive down to Florida yearly, which I probably plan on doing maybe. But I don't know. 70 grand seems like a lot of money to me.
Right. Yeah. It seemed a lot to me. They originally started their price at 40,000, Peter, but the demand was so heavy they increased it to $70,000.
Oh, that's
You'll see the
incredible.
list is like 69 and
so,
change.
Nick, this is a fantastic news for a company, and on that news, stock is trading at $13, being 25 just a few months ago. That doesn't make any sense to me.
Doesn't
But
make any sense to me either. So I
I
bought
can
it.
take a look at that, but really,
I
now
think
Unless people are afraid of
I don't know.
more problems. I mean, if the economy keeps tanking, then or maybe it's just the other side is if it's not tanking, then maybe it's just a lot of
Yeah,
funds
but
selling the shares
but
because
Peter
look,
also.
when people. But let me make the point that maybe I'm making your point now, Nick. If you have an S&P 500 fund or you have a mutual fund and they start liquidations and people start getting out, they have to sell the shares. So maybe it is on sale. I mean, I'll have to look at the fundamentals.
Yeah, and look at the price earnings ratio is like 4.8. I mean, it's like
Wow.
next to nothing.
Wow.
That's what I thought. They're not Tesla also. And Tesla,
Yeah, that's true.
I could not buy into 1,000 times price earnings ratio with distribution that's limited and a vehicle that can only go so far. All the fundamentals to me of that company made no sense. And of course, it tanks since we discussed it. Ford, all the fundamentals make sense. It's a well entrenched, large national and international distribution coming out with a new product, basically a fuel efficient truck, which, and you're right, Peter, the top 20% in this country, what inflation? It doesn't bother
Right.
them. You know, what financial crisis? They don't see it. So, the lower end gets hit first, but the upper end,
Well,
they
I
keep
have to
on
say,
trucking.
wait, in
They
terms of
keep
buying a
on trucking.
70,000 truck, but it's not like people don't feel it. I mean,
Well, I know, but
but you're right. You're right.
they're already
People
back
are
ordered.
not affected like the
Yeah.
other 80%
And
or
then they're back
whatever.
ordered 200,000 vehicles. So the thing
That's a
is,
lot.
it
That's a lot.
reminds me of Boeing. I don't know if you know when the Boeing took off, when they started back ordering the 737s, all of a sudden the stock took off. So I'm going, well, when you have a hot product, you can't
Hmm.
beat a hot product.
I
And I
agree.
think they got a hot product, the F-150 fuel efficient, hybrid vehicle. And so I'm just saying something could go wrong. Who knows? The vehicle could
Yeah,
be
I'll
horrible,
take a
but
look at it.
yeah.
Sasha, what are you doing?
It's a tough choice, really, because that's not news about this truck F-150.
Sure.
It's been
That's
around
true.
for several months, if not
Right.
longer, and they have pre-orders, which is significant, but that's also been around for
Sure.
several months now. So with all that, I know something is strange there. I think we will find out really
Yeah.
soon whether it will
Well,
What
recover
are
and
you
will
doing,
start going
Sasha?
find out.
higher, or it may go
Sasha,
low.
what are
We'll
you
see.
doing with your investments?
What I'm doing with my investments,
Question.
I'm doing the core portfolio unchanged, no changes, no buys, no sells, stays where it is. The fund portfolio. The fund portfolio, I've done some pretty good things about what I overlooked actually, especially because I was doing a lot of shorts selling puts. Essentially, you are trying to extract all premiums at whatever you got paid, and you want to get maximum out of it. What I found lately is that options could be traded, and you don't necessarily have to stay there and wait for expiry, although you'll get more money. But you'll, of course, taking a little bit more risk because you can be assigned. But I'm selling options, the puts, only on the stocks that I want to buy anyway. So I'm not
Mhm.
scared of assignment. But in the meantime, liquidating position at any time at a reasonable profit should not be really overlooked. It's a great possibility, especially I'm more active lately on spreads. And what I have found, the funny thing is that in the spread is the same thing. You have both long and short instrument, and the one that goes in your favor, you can liquidate,
Oh,
and
yeah.
in a day or two or whatever, if you feel like, take another position, but in different time and strike expiration price. So this way, you are kind of in the market on the both sides, on the long and the short, and you can it's a little bit more involved investment strategy. It's not something that you can lock in for several months and you don't care anymore about it. It's something that you have to watch almost daily, especially in a market like that, when there are great fluctuations in price, but that benefits exactly that strategy. Look at yesterday's market, for example. If I had a spread, for example, I would go long Apple, say 155 calls, and go short 157 calls, for example. So if I'm right and Apple is coming up, and they yesterday exactly that, so I started making enough money on the uh, call side. But then today, when Apple it didn't go down big time, but at least it stopped going higher. It went down somewhat, like 0.5% maybe. So the short side now, I'm winning now all the way easily, and because I know that the most bang for your money you get by selling closest options, which means, for example, June 10th, which is coming Friday in 2 days. But I bought and sold basically I put the spread on June 17th, which give me a little bit more time, more premiums. So now this puts became all of a sudden much cheaper than I sold them for. So now I can buy and maybe tomorrow sell instead of 157. If Apple will go higher, I will sell maybe 158, 59 or so, or maybe farther months.
So does this strategy work better in a flat market or a down market or an up market? What does,
Well,
or it
well,
doesn't matter?
what I put was a bullish spread because, but it's only involves Apple. This is specific stock with a great news lately, and it seems to me that the market, even the market, will be neutral for a while. The Apple will probably outdo other stocks, especially tech
Oh,
stocks, for example. However, the market may go down, and then in this case, I will lose money on that spread, but not as much because I've already liquidated with a profit one of the positions. I will take another one, maybe different different time expiration and price as well. But it's just one example. For example, I've done very well with Neo, uh, which is unlike Ford, is going higher and higher all the time. After its
It's
debacle,
a Chinese company, right?
it's Chinese company, but all Chinese company are doing fantastically well. Even Alibaba, look at what it's
I know.
Really?
I kept holding it till it came back.
Yeah. And so with Neo, okay, I got immediately position in a rising market. I got covered calls, so I bought stock, I sold calls. Now, as soon as Neo stopped going higher and slightly went down, my puts became much cheaper than I sold them for. Sorry, my calls, covered calls. So I immediately bought them back. And as soon as Neo resumed, it's driving higher and higher. I sold the game, but different expiration
So
time.
how many transactions do you average a week?
A week?
I never asked you this,
Uh,
Sasha.
It's a good
I,
question.
I'd say probably 5, 6 at least.
Holy cow!
That's more than me. Usually one.
You're doing 5 or 6 options, like selling and buying puts and
A
calls
week,
a week.
yeah, a week. It
Wow.
well, some days I may not do anything, and some days I may do 4 or 5 in one day. Again,
Sure.
if it's an active market. So I remember it 20 years ago. It used to be popular at day trading.
Right.
So, but options, your day trading is much more profitable because the time that you're selling, it's
Right.
going
You're
to
the
down.
casino,
Yeah. Well, I'm
right?
in a casino, so I have much better chances to profit, especially if you have a large position, say on Neo. Say I would buy 2,000 shares, so I'm selling 20 puts, 20 covered calls, I'm sorry. And as stock, at some point, it cannot go higher all day on the market, 2 days, 5 days. So it never happens. So it go higher, then obviously it had small retraction. But on options on the covered calls, retraction in a percentage is way much higher than on stock itself.
You have
So you
time
already
working for
know
you.
it's working for me, and it's not. Well, you know that I'm a very greedy person, so when I see the profit, then I immediately that's my shortcoming, really, but that's the way I am. And also, I'm scared that if I'm not going to do it, somebody else will do it. So somebody else will take this money and instead of me. So I'm trying to avoid this situation and be there first. I don't know how many people day trade options. It's not. I'm not saying that I'm trading daily, even Neo, but on Neo, in just this week alone, it's only third day today. I did 4 trades,
Really, wow.
back and forth,
Are
back
you
and
doing
forth.
anything with Nvidia? Nvidia is down. I keep looking at it. I bought it before, went up, sold it. Now it's back down again. Are you doing anything with Nvidia at all? Or
With
you're,
Nvidia, I sold covered call. I'm planning to buy it. I sold June 17th.
mm,
About I sold 192 and a half. Stock is now what 188, if I'm not mistaken. So I'm planning possibly tomorrow. Actually, tomorrow, maybe even Friday, stock could go even lower simply because there will be PPI report on Friday and so on. So, my rule is Tuesday, Wednesday, you buy, Thursday, Friday, you sell.
I would
So
say something about the chip market because
they're all down today.
first of all, I did
really?
fabulously. One of my best investments ever was your recommendation on Nvidia because I wrote it up and then I got out pretty close to the high. I don't know if it was high, but it was fabulous.
Yeah.
I bought a lot of Nvidia, but uh, it's a funny business because it seems like there's 5, 10 years demand, and some of them pay an okay dividend, not great, but it seems like the growth is there to me. But I have no, by the way, in disclosure, I have no, chip stocks right now.
I don't even.
Just in
I
more
know.
disclosure, I had maybe 61 stocks or something like that a year ago. Then I brought down to 30. Now I'm down to about 16 or 17. And partly because I moved more into bonds, but also because as a safety net, but also because I just don't like the environment for most companies. But the chip stocks, I go, these companies have potential growth for years. Eventually, I mean, the technology moving to the cars, first of all, is going to require a lot of chips. The EVs are going to require a lot of chips. And then eventually, I have a vision. It may not happen, in the next 10 or 20 years, but I think it will, where we'll have rooms in our houses, which will be like the Star Trek holodeck. And so you'll have, and they can almost do this now. So you'll have maybe 4 screens and it'll be an immersive experience. And that's going to, even just bigger TVs are going to, and better TVs are going to require chips. So there's such a demand for chips out there. So at some point, when the market, I think, is down, and that's going to take a while to me, but we'll see. Then I think there's opportunity in the chip sector. What do you think?
Well, all cheap stocks are down. Now I have even less stocks than you, Peter. I have only 12 stocks. I have 6 stocks in my core portfolio, which I don't touch, and I have 6 stocks in my fund portfolio. Which Nvidia is one of them. AMD is another one.
Oh,
Neo,
AMD.
yeah, now is Neo. I did one trade this week with Roblox because it's kind of a funny stock that is followed by Wall Street. So I bought, sold covered call. After I bought, not at the same time because the stock was on up move. So I wanted to wait until it will go somewhat higher. Only then I sold covered call and then bought it back at profit.
So
And
let me ask you, Sasha, of all the chip stocks, is that the only chips that you're holding that as a long-term investment, right?
AMD.
yes,
AMD.
yeah, that's right. Oh, by
And
the way,
is that the only chip stock you have right now as a long-term investment?
Uh, well, it's a fun portfolio, so there is nothing long term. But if I
No.
want to have fun and at least selling covered calls or so on, I have 3 stocks. It's Nvidia, AMD, and
Uh,
Qualcomm.
oh, you have
Qualcomm.
all of them.
Yeah. Yeah.
Yeah, they're all quality stocks. I could have just Nvidia alone, but you see, sometimes Nvidia may not go higher or may go somewhat higher, but AMD will go 3% in one day. So I want to be sort of like in at least 2 or 3 cheap
But are
stocks.
you thinking of this as more trading, or are you saying you may hold this for like life or a long
No,
term?
there is no reason to hold it for life simply because there
Uh,
are no dividends or practically no
oh, no
dividends.
dividends on any of them. So
No,
they're,
no, I don't like
No
stocks.
dividends, no hold.
yeah, I know. That's my philosophy is get a nice dividend and try to hang on for life, especially if it's got growth.
Well,
But of course,
many,
that's not my trading portfolio. That's
and,
my
all, and a
holding.
lot of people are frown upon dividends simply
Oh yeah.
because what they're saying is the company that pays dividends cannot find any better place to use their money as just simply to pay shareholders, and therefore it's not a good business or so on. I don't buy that
I don't buy it either.
proposition.
No.
No,
And the
because
record
No.
shows that you're right because
actually they're
dividend
increasing
stocks
dividends.
outperform other stocks, and
Absolutely.
dividend growth stocks outperform dividend stocks.
Right.
So that, by the way, if Milan had been on this week, I don't know if he's coming back or not, but I was going to bring up a few points about his philosophy. But one is he's saying put it all in the S&P 500 and then put cash in half and then pour it over. But you might as well do that with dividend stocks because they'll outperform it. You could have half cash and half dividend stocks if you wanted. And I
Yeah.
think maybe it would
But
perform. But I'd have other comments about
I
that.
just have a problem being that long in cash, especially during an
Oh,
inflationary
I do
environment.
too. I've been thinking
And
about
that's
it.
part of
That's
the
a
reason I
problem.
bought Ford. Here's the other reason I bought Ford. I'll give another reason is that Ford holds hard assets that are valued at the cost basis. In other words, they don't reflect the fair market value of what these hard assets are on their balance sheet. So there's been inflation that should reflect it, but it isn't reflected because the way the accounting principles don't work. They
Exactly.
do cost basis, they don't do the fair market value. Another thing interesting that happened this week is Amazon did a reverse split, a 20-to-1
Oh yeah.
reverse. Okay. And then I had some commentators said, throw it all in Amazon. They're 125 a share and all go back up. Well, the problem with that is that Amazon and some of these other companies, these tech companies, are subject any time to a antitrust suit. In other words, you get the black swan. It's the same problem I have, Peter, with Baba. Even though I own Alibaba, here's the problem with all the Chinese stocks. Trade war or something happens, and all of a sudden
Yes and
your
no.
stock
Let me
goes
let me
down.
comment on Amazon because that's my only holding right now in tech. And it's
Really, is
first of all,
Amazon?
it's through puts. So I sold
Sure.
puts on Amazon very high a while ago. Now I'm down, but my portfolio is fine. As a matter of fact, I hit a new high this week, even with it, but it took a loss on Amazon. I made a lot of money. But here's why I like Amazon. First of all, I've seen a couple of articles just this week. I didn't cover it, but I was going to add it in there. That said that Amazon is selling right now for the value of AWS alone.
Correct.
That's
Right.
their, so you're getting the retail and the ad business for free, according to these articles, and I tend to agree. Now, they are selling right now 40% of online retail goes through Amazon in the country. That is a lot of sales. And also they have their ad business, which is doing very well because people go to their site. I love Amazon. I go and people, I mean, they're amazing. To me, it's a wishing well. I go there, like whatever I want, more or less, I find. I think their Amazon choice is fabulous because I can really trust them, their reviews, and also their Amazon choice is usually the one I wind up with anyway. So I believe in the company, and I like Microsoft too, but I got out because it's correlated, and I'm nervous about even the multiples on Amazon. But I think Amazon it's the one company I would hold. I am holding, for the long run, and I think that it's if any company will come back in tech, it'll be Amazon. The last point I'll make is everybody looks at their performance, but they're not considering that they keep reinvesting in the business. They're always making improvements. So let's say the economy slows and maybe their sales slow a little, or AWS doesn't keep accelerating at a huge rate. It's been accelerating. Then they can always cut back on spending some money. They don't have to, they can say, okay, we'll add, some new features slowly, right? I could go through the list of features, but I won't. But these things cost money. Adding trucks costs money, So at some point they'll say, you know what? We have trucks, we have this, and sales went down a little, so we can cut back. So they're in control a lot more than a lot of other companies are in terms of dealing with economic stress or anything. So I like Amazon
Okay,
myself.
thank you, Peter. Another good, before we finish, I would like to mention very specific issue. We are in a month of June. On third Friday of June, there will be triple expiration options, features, and futures on S&P. And normally, it's also the end of second quarter. So Peter, as used to be a Wall Street professional, you know that a lot of people on Wall Street, they want to get their bonuses paid. And nobody will get paid any bonuses for negative performance. So I expect that by the end of the June,
Really?
all indexes will go higher, regardless of all the gloomy economic outlook, all horrible thing. But business is business, bonus is bonus, and our friends from Wall Street will make sure that we will end this month very, very
Let me
well.
just throw in my dividend stock. That's interesting, Sasha. I'm going to have to think about that. Thank you. So here's a chart which relates to, okay, good. It relates to my pick this week, which is Antero Midstream, which Nick has liked for a while, and I had recommended 0.25%, and Nick bought it. I don't know what percentage you have, Nick. But this one over here is the BP Rapid Transition chart. So what this means is BP did a chart which said, if we transition quickly to alternative fuels, what will happen? So you can see coal goes down a lot, oil goes down a lot, natural gas it stays basically flat, and the renewables goes up a lot. So under this rapid transition, you want to own natural gas because this is a solid business to 2050, by the way. So the implications of this are two. One, if you're an oil company and you say this might be our future for oil, why are you going to overinvest in oil when in 20 years, 30 years, your business, and a lot sooner, your business might be going down the tubes? So the other thing is, it says natural gas is the place to be because it's a stable business. So Antero has a 7.9% dividend. It's a corporation, even though it's a midstream. So it's not the complications and the benefits of having a limited partnership, but at 7.9%, it's solid. I put, by the way, 1% in there. I still don't love it because, and I'll tell you why for the short run, but because a company like MPLX or EPD has growth this year. Antero is covering their dividend with cash flow just about even. It's close. but that's because they're putting a lot of money into growth projects. So in a year or two, some people think their dividend could go up 50%. It may not, but the advantage of Antero is it's coming from the Appalachian Basin, which is the least expensive gas in the country. And so that's very valuable gas. It's also the most ESG gas in the country. So people are going to need natural gas for the next 20, 30 years, as opposed to oil. That's why I'm out of the oil majors, basically, because they have to struggle even more with the transition. But I'm 1% on Antero now. And as a footnote, and then I have a question for Nick, because I want to ask what percentage you're in. But I did drop Dick's, and you were right, Sasha. It's the only loss I've taken percentage-wise for a long time. I only put 0.25% in, but I couldn't hang out there anymore. Given the target retail sales, I lost maybe 20% of 0.25%. It wasn't a big deal, but I still like the company. But I was thinking, I thought I was viewing it as stable, but the problem is they have a lot of clothing, and I'm thinking if we're really going into struggling consumers, who knows what part of their business is clothing? I can't figure that out. So I figured I'm out. I just put it in a 3.5% bond instead of 2.4. And, maybe I'm wrong about the bonds, but I can't lose because I get 3.5% for 20, 30 years. And it, on part of my portfolio, and I'll just reinvest it. Nick, what percentage are you in Antero? I just wanted to
I don't know the percentage, but it's my fourth largest holding. My first largest holding is cash, which I don't know why, but I just pushed everything into cash when Sasha said the market was going to tank, and I liquidate all my stupid stocks at the right time. And then the number one is, believe it or not, it looks to be MPLX, then USAC, and then number three is Antero Midstream. So the thing is, and I'm just holding those, Peter, because I go during this energy crisis, which I think is going to continue. Why get rid of it? It's a good dividend stock, and
my favorite joke, but it's true, is I always say all I want is a high dividend, growth, and value.
I want high dividend, growth, value, and guarantees. Then I'm okay.
Exactly.
One of the stocks that I'm holding in my core portfolio is British American Tobacco. They will have in August another dividend increase. So how can you sell stocks that keeps going higher and higher daily and has a dividend increase coming in August? So I'm almost got married to that stock. But anyway, good luck to all our listeners and yourself for upcoming week. And we'll talk more about next week, Wednesday. Thank you so much. It's Modern Investing. Bye-bye, everybody.
Bye-bye.